Okay, good morning everyone. Stock market technical analysis. This video is all about trade ideas. I try to be pretty timely with the information, so I want to point a couple things out that I'm seeing this morning, which might indicate where markets are heading today. All right, so starting off with the triple Qs in the tech sector. Again, big support right here at 297.80. We broke through it so far. You can see, though, all the reactions that we had in the past on that trend line. All right, so this was resistance in the past, and then it was support. So we've undercut it right now, but I think there's a good chance that we actually shoot back above that, and this could be a bear trap. All right, so just keep an eye out for that. Look for the price action. It should be pretty impulsive. But if you notice them rallying this thing and we get back above this key level, you know, about 298 or so, we're likely going to have some sort of a bear market rally. Okay, so one of the reasons why there's a pretty good higher probability that we might actually have this bear market rally is Amazon. That's one of the reasons. You'll see here that Amazon, all right, I talked about Amazon in the past getting to this key level of about 2050, 2044 is where I have it. But look back there, good support. I've had this marked down. I've talked to you guys about it, where I think Amazon's likely to fall to. Amazon is in a bear market, but where the area that I think that we're likely to start a bear market rally is about the area that we're in right now. So look for buyers to step in on Amazon. So far this morning, they are. So if I go to the hourly chart, you can kind of see here, I have this downtrend line marked out. And right here on this hour, we are breaking out. All right, we are having a breakout on the hourly. So far, a bearish engulfing. If this rally continues in Amazon, then it's likely the market's going to notice it, and they're likely going to start to rally the other tech names as well. So keep an eye on that. That's very key right now for the market. Okay, so nothing says it has to continue to break out, but if you see more impulsive buying from really kind of right where we're at right now, which is about this price, 2,133, likely going to trigger a bear market rally in the FANGs. And once the FANGs start running, the rest of the market will catch on. One way that I would be looking to play it is Netflix. So Netflix is clearly in a bear market, but we got some big gaps to fill. So if we're going to get a bear market rally, we have some really good targets to look at. We've got a gap at 329.18. Okay, so that would likely be, you know, probably my final target. I don't think you get the second gap to fill up here at 508. And then you have gap entry right here at about 245.70. Okay, it's right in there. So I would look for a move up to gap entry, probably get a pullback there, and then possibly a move up to gap fill as the final target. Looking at the divergences, you can see Netflix on the daily chart has been building bullish divergence on the RSI. You can see we have it right here. It's not there on the PPO, but definitely there on the RSI. And if I go down to the hourly chart, you can see clear bullish divergence there showing up on the hourly chart. So bullish divergence, this thing's been just building that bullish divergence for a while as it's continued to drift lower. I think a lot of the selling pressure, because it trapped a lot of the bulls and it's really, you know, just broken down pretty heavily, I think you've possibly kind of, it's been sold out. There might not be that many sellers left. Again, after this second gap down and then this constant drift, it should have probably wiped out a lot of the selling pressure. So I think it might be free to rally for a pretty impulsive rally. Again, this will just be a bear market rally, so we would only look to sell ride it up and get out. This is not an investment, but yeah, there is potential. Looking at gold, again, nothing's real changed. We're still just kind of hanging on to this support right in the area about 1840. This is bull market support. So this is where the buyers should be stepping in. They really shouldn't allow it to go too much below. We might make a brief undercut of the 200, maybe something like this, where we break and then recover, but not much beyond that. So if you see gold holding, you know, it should hold in this area, you know, maybe down to 1800 or so, but shouldn't really get much below that. So just keep an eye on that. The miners also have been sold pretty heavily. Looking at some of these miners, again, I only own a couple and they haven't really been working, but they we'll see. This one, they probably are going to step in and buy it. It's right before earnings. We're breaking down. This is AG. It's a bullish falling wedge pattern. We're breaking down to the downside right before earnings. They're probably going to step in and buy it today. So keep an eye on that. Again, there's just the potential for a pretty strong impulsive rally today on these miners. We're holding bull market support. We don't necessarily have the bullish divergence anymore on the momentum. So that's, that does definitely throw a wrench in the bullish case on this. I'm not looking to really add any to this. Actually, probably looking for areas to stop out. But again, we didn't enter the trade until about right in here. All right, so definitely down. But again, it's not a huge position. Down about 20% on that one. Again, I just started nibbling in these miners, looking for opportunities. Haven't got it yet, so I haven't really loaded up. But we're on the lookout. And the small caps, again, I just talked about how we're holding. We hit our price target yesterday, and that price target was 170, about 170.50. We hit it yesterday, undercut it briefly today, but they're stepping in and buying it. This should be support, all right? We should get a reaction here. And if we don't get a reaction here and we break down to the downside, then we would take out the bullish divergence. But as of right now, we still have bullish divergence right here. Look at the RSI. Let me zoom in on that. Starting to turn back up right there. So keeping that bullish divergence, to me, it tells me that we're probably set up for a bear market rally. But again, if you don't, just the way to play it is, I think it makes sense to probably go long here, in my opinion. And just set a stop somewhere below, just slightly below there. I mean, obviously that's where all the stops are going to be, so they might try to run it. You might need to give it just a little bit of breathing room, but shouldn't go too much below that. So you'd want to stop, below that. And if we get the rally, then, could rally all the way up to about 187 or about 188 is probably where the rally could go to. Okay, they're starting to rally the market, it looks like. I'm seeing like Apple rallying, and I'm seeing Amazon rallying, and Netflix is actually rallying. I did take a position on Netflix. I'm going to get the video out, and I'll just maybe try to put out shorter videos today just to kind of follow up. But I need to get the video out so you guys have timely information.